Welcome back to Lunch at the Market on this uneventful Friday. We're down nearly 1% today, but it feels like nothing because it's been very orderly, and yesterday was such a great day. It'll be interesting to see if we just get a noon swoon or if we bounce off the close of Europe. Obviously, both of those phenomena would provide the same end result, that being that we would be up by the end of the day, or at least up from the lows of the day. This week hasn't been terribly awful. We did manage to sell some calls at the open today as we try to take advantage of what is still elevated volatility. This month has certainly been one to forget, and we hope you remember how this month felt so that you can take what you need off the table next April so that you can enter May and June with plenty of cash next year. We do ultimately think we trend back up the rest of the year, but to be honest, Doug Cass has done an amazing job calling this market. He called the lows last year in March and then called the top a few weeks ago. The level we got to previously is our estimate for the full year, that being around $12.13 on the S&P for the year on $80 of earnings with 15.17 multiple. It's interesting to note that Jim Cramer wrote an article for realmoney.com, that's the paid side of thestreet.com, in which he discussed Doug's target of $83 to $85 a share EPS for the S&P 500. We're very conservatively under that with our $80, so that 12.13 number should be a good one. Look at our screen today. If you don't own Rio Tinto, or your cost basis is higher than the 46 or so that it's trading at today, we recommend that you get long this name. Trades with a PE of 4.17 with a 2.1% dividend. Valuation is very attractive, and the company will benefit tremendously if the mining tax doesn't ever take effect. On Mad Money, Jim had the CEO of an Australian natural gas company on, and he explained the way that politics work over there, which put Jim and us much more at ease with the prospects of seeing the massive tax on mining profits stick. Under $30, the RSX, that's the Market Vectors Russia ETF, still looks attractive, and it was Joe Terranova's final trade from yesterday on Fast Money. Speaking of stocks that were on television, the outgoing CEO of Foster Wheeler, that's FWLT, was on Mad Money and told a really great story concerning the future of the company. The company's backlog is bigger than its market cap. It trades with a P of 8.87, and we flagged it before, under $30. Well, it's way under $30 right now, around $24. Taking a look at Dan Fitzpatrick's 3 stocks I saw on TV, there's a great technical case for FWLT. And as it looks like it's poised to bounce off the bottom of its Bollinger Band. That's the technical tool chart watchers use to find the channel a stock will most likely run in. It's at the bottom of that range, and Fitzpatrick says you can probably stay long until the $29 to $30 level, so that's about 20% return from here. Take a look at Foster Wheeler for either reason, as we love stocks with single-digit PEs. If you have something great planned this weekend, if you're going to make something for dessert, consider adding IPSU to your grocery cart, as this sugar producer trades with a PE of 1 right now. Had recent execution errors getting its full capacity back online, so be aware of the issues with the company. But the valuation is extremely compelling, and they're in a market that isn't very discretionary for most Americans. Enjoy that weekend. I think we're actually going to roast some marshmallows one night out here with the kids, and it should be a lot of fun. Brad loves to light anything on fire, and what kid doesn't like marshmallows? It should be fun. We'll see you on Tuesday. Hopefully with the Celtics safely into the NBA Finals. We might need everyone to start praying for them. It's been pretty rough lately. Thanks for tuning in, and we'll see you next week.